With Pfizer hitting fresh new lows, we have to understand something here. They are facing an $18 billion patent cliff. This is leaving over a 6.7% dividend on the table. That could be in question. Pfizer's historically trading for a low valuation. And what does the future really look like? In this video, we're going to go over the pros and the cons of Pfizer. We're going to take on this $18 billion cliff that they face, but also talk about the opportunities that the market may be overlooking. If you'd like this type of material, make sure you like and subscribe, and let's get into today's video. Now, before we get into the patent cliff, I do want to say that I have a $24 to $25 ideal stock price on Pfizer, and I personally own shares, but once again, this is not financial advice. This is just my opinion and what I'm personally seeing with the stock. If you've been wondering why everybody is so negative on the stock and the fact that it's trading at 8 times forward earnings, well, it is due to COVID vaccines and the fact that they have $18 billion of patents coming off the books in the next few years. This is leaving people very scared of the future of Pfizer. The last couple quarters, Pfizer actually had a beat and raise and is showing some stability still with their COVID remedies. Now with the new administration in, there is a lot of fear that maybe they are not going to sell as much Paxlovid, but I don't think it's going to take as big of a hit as everybody thinks because people tend to still rely more on science, especially when they're not feeling well. We can see that 2025, they're going to do $63 billion in revenue. In 2026, they're going to do $63.2 billion of revenue. And where the patent cliff starts is basically 2027 through 2030. So they have a couple years here of EPS stability and trading at historically low valuations, as we see here at 8 times earnings. Now, historically, Pfizer has traded for about a 13 multiple, but because of all these bad headwinds, we're seeing these multiples compressed to 8 and 9 times, which is historically cheap, actually about a 40% discount. If we line that up with the $17 to $18 billion revenue loss that's coming between 2025 and 2030, that ends up making up about 30% of Pfizer's top line revenue. So the stock's getting hit about 40% of its multiple, and it's losing about 30% of its revenue, which is kind of making sense here. People don't care what they're doing next year or the year after. People care that they don't have any GLP-1s. People care about the new administration stopping vaccines, and people care about the patent cliff that's around the corner for Pfizer. So if I were to draw this out for 2025 through 2030, the next 5 years of Pfizer's future, I have the $63 billion that they're projected to do in 2025, the $63.2 billion that they're projected to do in 2026, and then we have this patent cliff coming around the corner of negative $18 billion. So now that we kind of have an understanding of what the future is going to look like for Pfizer, we'll put a bunch of question marks here because nobody really knows, but the market's starting to price in some things, as we can see by valuation. Now, I just listened to the 43rd annual JP Morgan Healthcare Conference with Alex Borla, and I will say that there is some promising things that are actually getting overlooked by the market due to negativity. Now, I don't know if they can execute to 100%, but I'm going to talk through what I heard through this. They recently launched a multi-year cost savings plan of $1.5 billion by the end of 2027, which is adding to the already $4 billion that they had in plan. So if we add these two figures up together, we're looking at a cost savings of $5.5 billion. They attribute this to relying a little bit more on AI, automation, and being more efficient. So down at the bottom, I am putting $5.5 billion of cost savings that's coming for the company. Through the conference call, Alex Borla actually talked about RFK's nomination. They've met multiple times and they really want to take on cancer. He doesn't think that he's going to have that large of an impact on Paxlovid and the vaccines. He believes that people are still going to rely on science. Yes, sales could come down, but we see spikes in 2 parts of the year that should do well for Paxlovid, and people are still going to take these remedies. And with the last 2 quarters of beat and raises, I tend to want to listen to him here. But the thing I want to point out is there's 32 products in phase 3 as of right now. In the JP Morgan conference, Borla talks about 5 to 6 of these coming to fruition and creating nearly $20 billion of revenue for the company over the next 5 years. Now, I think he's being conservative here from the sounds of it. He believes the street is offsides on a couple products. So I'm going to take him for his word and say that there is $20 billion over the next 5 years that could come from the pipeline of Pfizer. A lot of this is going to come in the form of oncology and cancer remedies. Now, where I think this actually gets interesting is Pfizer is coming to market with a competitive GLP-1. It's called Danuglipron. Not sure if I'm pronouncing that right, but if we search their pipeline for this product, we can see here that it is in phase 1, which means that it's in early stages. But in the conference, Borla still believes that they will be one of the first for the first competitive GLP-1 that will be taken orally. So they do have an opportunity for this as well, along with what they believe about $20 billion of revenue that can come from the pipeline. So because it's so early in the pipeline, I'm going to put the weight loss closer to 2029 and 2030. Who knows how much they can gain from a market share. This is considered to be a total addressable market reaching $150 billion by 2030. So what percentage of that could they capture? Nobody really knows, and maybe they don't even make it. But we do have to look at this as a possible opportunity down the road as well. Because if we're going to look at all the negatives, then we have to start looking at what is the company capable of doing. With the cost initiatives and Borla's projecting out roughly $20 billion of revenue coming from their pipeline over the next 5 years, this is definitely going to offset the losses that we could see or the patent cliff that could be coming. And this is kind of where I see the opportunity lies right now with Pfizer. Now, here comes the problem. I don't know how this is going to play out. Maybe it only comes out to be $10 billion. Maybe it comes out to be more than $20 billion. But it's not going to be a clear trajectory line up here. What's going to end up happening is the patent cliff's going to happen, price is going to come crashing down. They're going to slowly have some positive news, price is going to go back up. Some things are going to fail in the pipeline, price is going to come back down. And then eventually, I think they will start going back into a growth path. So how low does the stock go? I don't really know. Maybe the bottom is in here, especially if things can start coming through on their pipeline sooner than later. But I want to share my thoughts on Pfizer's pipeline versus their patent cliff. Obviously, this is not an easy one to figure out, but the one thing I will say is this. Whether you were for or against the vaccines is really irrelevant. The bottom line is Pfizer created a product that went to market very, very fast, which tells me that they could possibly do this again, maybe in a different form. The run rate for these vaccines were supposed to last multiple years, but did not because it seems that COVID wasn't as serious as we all initially thought. And so they were given a huge runway of top line revenue growth that was taken away nearly overnight, and we saw that in the stock price. Now, a lot of people are knocking Pfizer for picking up Seagen for way too much money. But the bottom line is they were able to acquire this company with money that was pretty much not accounted for prior to COVID. So even if everybody thinks they overpaid, if they're able to get cancer remedies and be a front runner for cancer, I think the stock is tremendously undervalued. And I think the pipeline is a little bit stronger than people are anticipating. Now, on the flip side, we have to start seeing this pipeline paying off. If we don't see anything paying off in the next 12, 13 months, I do think it's time to kind of get away from this one for a little while until they show some promise. As always, this was my thoughts on Pfizer, and we will see you all in the next one.